Okay. All right, that's good for now. This microphone is very weird because when you touch it, it goes into a mute mode. So whenever you want to grab it and adjust it, it's a little bit weird. Good quality mic. Hello, 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 hello. All right, guys. Hope everybody had a Merry Christmas. Happy holidays. Merry Christmas. Christmas time is special. Good time to get a break and a great time to not be trading because literally nothing is going on. We're going to look at some daily candles here and we're just going to see that. I mean, we had a little bit of movement, right? So the last 3 days, right, we had a total max move of, right, 2% up and down, right? The day before that, it was a 2% move. And then the day before that was another, like under a 2% move. But really, we're not really moving anything with any rhyme or reason. There's not really any good levels to work off of. Just kind of wanted to come here and just give a little bit of a Christmas update. I mean, some people would say, oh, we had a Christmas pump today, right? We're going to go to the 30-minute time frame and we're going to see here that like, okay, yeah. So you had a couple candles that pumped up. But really, it's just in the middle of some chop. See, so there's a difference between seeing a good rise, and then there's a difference between having a good trade. And right now, I'm still going to say it that the best high probability trades that I'm looking at are right here, right? We've got a daily and an MPOC right here. We also have to think about the local range, right? And I do have a video coming out on process. So as you can see here, when you look at this chart, what is the highest probability, right? So one of the first things that we want to think about when we come to the chart is we want to think about the environment. So I have a really good video in the works that has an kind of an airport analogy, right? How great traders are not coming to the airport just trying to dive into a flight, right? They're wondering how to navigate through the airport seamlessly. If it's right time to board a flight, what is the perfect flight that's going to get them to their location direct? Rookie traders will just get in there and they think, all right, I'm at an airport, I got to fly, right? Good traders aren't doing that. They're thinking about who's rushing and who is out of control, who's really running and screaming here, and how can I use that to my advantage, right? If somebody's rushing, there's an edge. If somebody's getting trapped, there's an edge. If everybody is doing the same thing, there is no edge, right? And you're probably going to see the market fuck people over. Because if there's one thing that Bitcoin and markets, they love to do, is they love to fuck people over. One of the best things that I learned about trading Bitcoin was that Bitcoin loves to trap people, wash them out, and then continue on. Bitcoin does not like a lot of participants. It likes to wreck a lot of participants and have a few participants take off. But maybe it's even fair to say that the bigger traders in Bitcoin still have an asset where they can really wash people out, right? This might change in the future, but for right now, this is the way it is. So one of the key things we're looking at when we come to the charts, when we come to the airport, is we're looking at the environment, right? We're going to say to ourselves, what kind of trading environment is this, right? Visually, it's choppy, right? It's not no higher highs, no higher lows. It's kind of a mixed bag. We are taking some highs, then coming down, but we're not really taking any significant lows. So it's just kind of like this weird range. And we could define that range. We could define this area. Man, there could be a couple different ways we could define this area. But that's one of the key things you want to do when you're trading and you're going to be a trader is you want to say, I want to define the range. Is this the range, right? Or is it fair to say that this might be the range? Because we do have a series of highs here. And when you have a series of high, 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 we call this unfinished business, right? So when you have unfinished business at the highs, usually you have liquidity, right? And we know that Bitcoin needs liquidity. All markets need liquidity. It is the lifeblood. So that means maybe we come on up here. And if we come up here, usually typically what we see, and now we're getting into a second part of our thing, is execution. So one of the first things you want to look at is environment. What is the environment? And what does the environment dictate? So as we can see here, this is some chop, right? When we're in chop, typically, what are we doing? Well, when we're in some chop, typically we're wrecking people, and we possibly can get an indication by any kind of divergences on which way we will break. But if we can define the range and we're in some chop, or maybe we could even possibly say that we are in some kind of triangle, right? Because we are making low, higher low, and we have a series of equal highs, right? So we could say this might be a situation where we could come and fake out, take liquidity, and then maybe continue to the downside. Once you have finished business on one side, typically you're looking for price to rotate to the other side and finish business over there, right? Finished business, unfinished business, these are all key things that you should look at. So typically, what we're going to see here is, number one, do we have a pattern? Yeah, we have a pattern. We have a range. Oh, what happened to my pattern? There we have a little bit of a range. Bam. Arguably, it's like that. And then we might even say that we have a little bit of a triangle we're working on. So we have some liquidity to the upside. Now we want to look at the environment locally and say to ourselves, how do we do that? Well, we'll pull a fixed range value and we see where are we at in the auction process. Are we in the value area? Yes, we are. Are we above or at the point of control? We are very new in the auction process. And where are we at as far as the value area high? So we can see as far as this, we are in the value area low. So when we're in the value area low, typically what we're looking for is we're looking for longs. See, a lot of people are bearish here, and I am bearish too, but price is at the value area low. I didn't catch the value area low long, but I'm looking for price to go up because I want to get into a short. But to get into a short, I need for this to be in the short environment, which is taking liquidity at a value area high or at a level of confluence. So you guys all know the process. We are going to run through our daily, weekly, monthly process. So let's do that now. Here we go. Start off on the monthly. Monthly high time frame analysis. You can see here we've got 2 months to the downside. Last month, strong move to the downside, and now we are building value below previous month's value, bringing in here our high time frame levels. We can see we have monthly resistance coming in at 114.022 and monthly support arguably at 71.401, which is a previous support resistance flip. Let's go to the weekly. What is the weekly environment? First off, do we have any untapped weekly levels? Yes. Below us, we have an untapped weekly level of 78.322 right here. This is an untapped weekly level. Down, 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 down. Test, sweep of liquidity, down candle, then an up candle with follow through. This is weekly value of 2 weeks right here, right? That's that. Now, we'll go to the daily. Do we have any of these weekly levels here? Well, we have a weekly red candle and then a weekly green candle and no candles after going through that level. This is untapped liquidity. You can see here, do we have a weekly level here? No, because we traded through that several times. Do we have a weekly level here? Arguably, we're going to put a level right there and we're going to see if we tap through that. So I'm going to come here to this weekly level and I'm going to clone that. And the reason why I'm going to clone this is because I have this set to function at different intervals. I have here, this is only showing on a weekly interval and below. Then we're going to come here to daily. I'm going to see if we have any new daily levels. Okay, we do have a new daily level. Actually, this is today's daily level. So this would be a daily open. So I'm going to clone, and you know where this level is going. Unlock, and that is going right there. Boop. And we are going to label this daily open. And I'm going to set a little alert on it. I mean, we're pretty far away from it, So I would assume that this is going to be a new daily level. Test of daily open. Okay, yeah. So here we go. Now, already, just from our horizontals, we can start to think about execution, right? So going back to the airport analogy, when we're going through the airport, we have our environment, right? Our environment is the visual appearance of what's going on. Are we trading in a pattern? Are we trading in some chop? Is there a harmonic? What is our Elliott wave structure, right? I know we didn't go through any of that, but that's our environmental cues. Now, once we have, when we're in the beginning phases of building a trade, but now we're thinking about already of where can we board a flight? What makes sense to board a flight? As you can see here, we have here equal highs with arguably a weekly level. So already I can see that this is a possible zone for an SFP or maybe an intraday trade, right? There might be an intraday trade here. And the reason why I say intraday is because these levels are weakened. As you can see here, this is a weekly level. This weekly level's traded back here. We traded through it. And then now we're starting to really not disrespect it. I wouldn't call this respecting this level. I would call it not disrespecting it. So this is somewhat of a juicy level here. I wouldn't say juicy, maybe like, I would call it some beef jerky. It's not like an hour later or a juicy fruit. We can see here that the point of control is a little bit above it, a little bit scattered. So let's look at another environmental cue. We're going to bring up ATAS here, and we are going to look at some naked points of control. I am going to have to load this up. I thought I was already loaded here. No worries. I'm going to get rid of something here. Let me do a little house cleaning here. Bam. CC Pool. Big shout out. Thank you, Daniel, for this badass template. And it's coming up in 3, 2, 1. Here we go. All right. So this is loading. And now I'm going to get out my trusty pen here because I might write down some levels. And what we are looking at here is we're looking for 3 different things. First off, what we're going to be looking at is at our naked points of control, right? Naked MPOCs, super reactive levels. Do we have any new MPOCs? 89,875. 89,875 for a daily. Boom. And this is actually a strong move to the upside today because as you can see here, I'm going to kind of get in here and you can see that we opened down here. We crossed all the way through previous day value, right? Say previous day high. And then now what you can see is we are building value above previous day's value. This is an important concept that I want you guys to understand. It's the concept of value. When you're ranging and you're building value, price can get kind of stuck. But when you dip outside of value, previous day value, and you take liquidity, one of the most common things that can happen to price is it's going to slice right through the previous day's value because it's looking for liquidity, right? So if we're ranging, and price opens here below value, we can see that open right there. That's that line. And then we come down, and as you can see, we have here a little SFP that dipped lower than the previous day, right? This is what unfinished business looks like. This is what finished business looks like. And then price sliced through, and now we're up here, arguably right here at current price action, and we're building value on top of value. This means it's a strong move to the upside, right? Because look, we had value, we took liquidity, and then we slice right through and we're building value. Very important concept that you should really think about learning. All right, so as you can see here, we are building weekly value inside previous week value. right? You can see here, we opened here, we came all the way down here to the previous value area low. Are you starting to get it now? And now we came up and we're building value on top of value. Remember, it's an auction. It's going to go one way, it's going to go another way, but it's going to keep on building or dipping or taking liquidity or washing people out. It has to move like this. Always think like it's an auction. Let's go to our monthly, and we are going to see if there are any monthly levels. And this monthly is kind of a tight candle, as you can see here. Open here, current price action here. We have a big spread, but it's not really like we have a tight value area. Previous month value area had lots of peaks, right? You can see we had a big peak, big peak, big peak. But also, as you can see, the volume is very skinny. See how this previous week, look how the volume is very much defined in a big diamond, right? And then here you have diamond, 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 diamond. That means that this level here of 113,300 or 111,300 is a strong level. Look at all that volume. All those people are still there. The market has a memory. Remember that. Okay, yeah, so those are our MPOCs. And I'm just going to transfer this MPOC, this daily naked point of control, to my chart. I got my trusty naked point of controls here, and I'm just going to clone, boop, double click, coordinates, and that is 89,875. And that looks like it's very close to our weekly level. See how we're starting to build this case now, right? As you can see, sharp move to the upside, slice right through value, and now we're starting to build some resistance. So if you've ever wondered why price does this, right? It's because of all these hidden levels, right? It's because of all these previous day levels and all these hidden levels. If you want to see what all these levels look like, all you need to do is really come on over here and turn on a TPO profile. TPO profile free on TradingView. And as you can see, we could even turn off the candles and trade with this TPO profile, right? We can see here, this right here is a untapped value area high. This right here is a naked point of control. Actually, that's the daily point of control. As you can see here, this is where our single prints end. That is support. And you can see here, this is I think that's a value area high. So you can get a start to see, oh, I can see why price goes like that, 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 like that. You can start to see how price moves when you start to think about value. Anyways, whoa, we don't need that. Let's bring back our candles. Let's get out of this TPO, and let's not confuse you guys too much. All right, so we're going to go back to EXO, right? So we do have a little bit of a scattered level here. I mean, so I'll say this, right? So when you think about participants, which is what we're going to do next, environment, participants. So when you're thinking about participants, really what you want to know is who's in charge, who's trapped, who's rushing. So I'm going to teach you how to do that now. I use this template to show me that. So basically what I'm going to do is I'm going to look at local price action on the 30-minute chart, and I'm just focused on any CVD divergences and open interest at significant levels. So as you can see here, we have a high and CVD has a high. We have here a low and CVD does have a low, but as you can see here, we were going lower, 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 and then right here, you can start to see that this was a drastic low, but this was an equal low. And then you had price that made a lower low and CVD that made a higher low, right? This is actually bearish because CVD is working hard, but price is driving down. Then you can see here that we made another low. There's your bearish correction. Open interest was going up, 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 right? So CVD is going up. What was open interest doing? On that big candle to the upside, it was negative delta. On this big candle to the upside, this was positive delta. On this big candle, this was positive delta. So I'm seeing here a lot of longs and a lot of buying, but price wasn't reflecting. You didn't really see that bearish play out in like a super big drop, but we did come up. We dropped. We didn't have any divergences there. But here locally, now, this is the key thing. I'm going to just say this. I was working through my process out loud here, but I will say that this is just mixed bag, right? Nothing's really popping out at me. There's no super big divergences. There's no key levels. It's not really anything. But this is very important. And the reason why is because when you're thinking about participants, you want to know who's in the market, who's in charge, and give me a clue on what's going to happen next. Well, I'll tell you like this. As you can see here, price is making a low and then a higher low, and CVD is making a low and then a lower low. When we see open interest up, we can see they long the top, open interest up, positive delta. Then we see shorts, open interest up, 13 million shorts. That's important. This candle was only 3 million longs. That wasn't a big trap, but 13 million shorts, that is a big number, significant for a trap. We see open interest up, shorts, 5 million shorts. So this is nearly 20 million in shorts with CVD saying that everybody is selling to the downside. But what's not happening? The price isn't going down. So I would say, since we flipped the VWAP, we flipped the session VWAP, and we flipped the weekly VWAP, and we flipped a resistance zone, I'm going to say that the highest probability is this is going to pop. This is going to pop for the simple fact that you have open interest shorts, open interest shorts, positive CVD divergence, and you're flipping key levels. This is like classic scenario for price to just give it a little. Now, I'm not saying it's going to pop up to 160,000, but I am saying is that this is the process of looking at participants, right? I know this is confusing. It might be confusing, but you have to have a process that you build that you say to yourself, all right, what's the environment? What does it look like? Are we trading any patterns? Is there some kind of Elliott wave? Are we impulsing or are we in a correction? Then you have to ask yourself, what are the participants? Or like, who's in charge? Is anybody trapped? Is anybody getting caught off sides? Are there any divergences? Do I see any moves building up? Then now we have a directional bias. Now I'd say, I think that price is going to go up. Now, I am going to get rid of this weekly level because I just feel like it's bullshit. And now I can put it all together. I can use my local range, my high time frames, and my naked points of control. And I can see right here that this zone here with this value area high is a zone I'll be looking for a reversal. Now, what's the problem with that? The problem with that is there's a couple problems with this level. Why I'm not in love with it. It's not taking any serious liquidity. Because if you remember, we pretty much just spotted that this was all a range. We had here a low, a low, a low, a low, and then now it's a high, a high, a high, a high, a high, a high. So we have to get above these highs really to take the liquidity. Now we have some liquidity that was built up here. Is it a lot? I don't know. And no one knows. We could look at the delta. But so what this is telling me is that the next big resistance zones, and there is a difference between resistance and liquidity, right? Just because you turned around at a certain point in the chart doesn't mean you hit resistance. You could have non-participation. You could have, you could actually meet resistance. You could find some kind of delta pocket. But I am going to say that this area here, right above these highs to that range point of control, is going to be a significant area for me. Because we have the entire range point of control. We have some liquidity, right? So these two areas are the next two areas where I will be looking for a short. Now, let's talk about the last phase of your planning. Your last phase should be thinking about execution. When you think about execution, you should be asking yourself a couple things. Now, thank you, Daniel, who gave me the entry triggers lesson. He gave me his main entry triggers. And with this, it really made things make a lot of sense for me. He has some main entry triggers that he goes for. He's looking for an SFP. What is an SFP, right? What is it? It's a swing failure pattern. It's a liquidity grab. It's a liquidity trap. It's this, it's that. Basically, at the end of the day, it's a wick. It's a rejection. It's when you came up to a level that's significant and you did something there and you moved away from it. Typically, if you have trap traders in there, right? So what can happen is that this range point of control means that there is a bunch of open positions. And I'll put it to you like this. Have you ever been in a position bleeding for weeks, days? If you've been in a position that's been bleeding for weeks and days, what are you doing? You are dying to get out at zero. This is what point of controls are. This is what naked point of controls are, is they are untested levels. We have to assume that the people who are sitting at these levels are either in winning positions that they're going to close out, or they're in losing positions that they're going to close out. Either way, these are reactive levels. So when you have something like this, which is a range point of control, which is a reactive level, sitting above some liquidity, what entry trigger are we looking for? We're looking for an SFP. We're looking for price to come up, tap this. Once it hits that rejection, it has accessed this liquidity and it has closed out other trades, and it will immediately move away from that. So maybe you just want to come up here, you're trading on the 30-minute, you maybe want to go to the 5-minute or the 3-minute or the 1-minute, and you just want to see a reaction at that level. Once you have a bearish reaction at that level, what do you have? You have your stop loss. Maybe you drift your stop loss a little bit above $200, $300, $400, whatever your risk is, right? The higher your stop loss goes, the lower that leverage has to go. So you have a stop loss. And then what do you have? You have a target. You want to be looking at this value area high, because when price comes back down, the first place it's going to test is that value area high. So you want to say to yourself, okay, if we lose that value area high, we're probably going to come down and test that point of control. If we lose that point of control, we're probably going to come down and test that value area low. If we lose that value area low, we're probably going to come down and sweep the lows. Participants, environment, execution. Keep it simple. Where are my levels of resistance? Who's in control of the market? Where does it make sense for price to go to fuck someone over? When this price gets to these points, what entry would I be looking for based on the context of what is going on? Do you get it? Are you starting to get it? Because it's really that simple. It's really that simple of setting the alert and then waiting for price to come up and just waiting for it to do what makes sense. As you can see here, this is a SFP zone. This is not an SFP zone. This makes more sense that price would just bounce, retest, and then come down, because there is no liquidity here. I mean, you'd be trading in chop, right? There might be a little point of control of this little sideways range if we took this and we ran it. If we pull the fixed range from right here, let's just check it out. If we pull the fixed range from here to here, and we see here, that's a point of control, right? This was a little range. And this level here with this naked daily and this point of control is the point of control of this range. That is not a level where you'd be expecting an SFP. This is a level where you'd either be expecting maybe a test, flip, and then keep going, right? So at these levels, over time, you need to start building up what entry trigger you're going to be looking for. You have to start focusing on not only which flight you want to board, but you have the opportunity in advance is to know which way do you want to board. going back to the airport analogy, what is the environment? Who's in a rush? Is this the right flight for me? And not only that, I have the luxury of seeing how I want to board. I can board first, I can board last, I can board through the back, I can board through the side because I have a clear view of the entire environment. I hope that helps you guys out. And, we're going to be doing more stuff like this. Stay tuned. These are some levels I'm looking at for longs. And when it comes to shorts, these are levels I'm looking at for shorts. And then when it comes to longs, I'm really going to be looking for these bigger levels down here, starting at the $79,000 to $76,000 level. I can't really say right now. I have to let price develop a little bit more. There are some lows down here, but they are scattered lows. I mean, we could continue to do this like dip and rip. Or maybe we come down here and we bounce, 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 bounce. So let's talk about this one. This is typically a situation where you start to see an inverse shoulder, head and shoulders, because what you're seeing here is you're seeing liquidity levels, but weekly, daily naked supports. So this is the type of situation usually I see something like this, boom, boom, bam, boom, boom, boom. This is typically where you start to see that inverse shoulder, head and shoulders. Bait the trap, fucking wreck everyone, reconfirm the low, and off you go. Shoulder, head, shoulder. I'll be looking for that down here. I'll be looking for a reversal pattern down here. And over here, I'll be looking for a retest. And up here, I'll be looking for an SFP. Now, don't get me wrong. I'm not married to this. It's just what I think, right? And we'll see how it goes. And I look forward to seeing how this goes, so I can either embarrass myself in the YouTube universe, or I can be a motherfucking G. And I gotta tell you, I'm pretty much a motherfucking G. I'll see you guys next time. Peace out. I'm gonna look over here and turn this shit off.